Good day, good people. My name is Mr. X Nkosi. I'm gonna take you through Fringe benefit on right of use of an sundry asset. Here we are calculating a taxable benefit in three different ways, depending on the nature of the contract that was signed by the employer and the employee. Okay, the first one is on the instance whereby the employer owns the asset. If the employer owns that particular asset that is used by an employee, we take the lesser between the cost price and the market value times 15%. Then we get the value of the benefit and less consideration if there is any. If there is money that is paid by an employee for the use of that particular sundry asset. And if the asset is used for part of the financial year or the financial period, we do apportion based on a pro rata method, whereby we say in an instance whereby an employee has used that particular asset for part of the year, part of the financial period, for in case for 7 months, then we say times 7 over 12 because we are using a 15% per annum. The second one is whereby the employer does not own that particular asset. The asset is leased from the other company. So in this case, we take the rental payables by the employer times the period. The total is the taxable benefit. The third one is whereby the employee is given the sole right of use of an asset. Then we take the cost price of that particular asset less a consideration, if there is any consideration, if there is nothing paid by the employee for the use of that particular asset, then the cost price or that market value, that whatever amount that is given as a price of the asset, straight to a taxable benefit. Then it's depend. If there is a cost price, take the cost price. If you are given a market value, take the market value less the consideration if there is any consideration. If there is no consideration, the market value is a taxable benefit or the cost price is a taxable benefit. Okay. In this case, we exclude some of the items. Okay, please listen carefully. There will be no taxable benefit if the asset consists of telephones, computer equipment, which the employee use mainly for the purpose of the employer's business, e.g. softwares, internet access, in the premises of the employer during the working hours. And again, the second one, where the asset is a book or the recordings or an art of work, then we do not calculate any taxable benefit. There is no taxable benefit here. And the third one, if the asset is provided as an amenity to be enjoyed by an employee at his place of work, and if the private use is incidental to the use of the asset, then we do not calculate any taxable benefit under these situations. Okay, let's do this practical example so that you're gonna get a clear explanation. Mrs. JJ, employer, granted her the right of use of a computer for private purposes for 5 months from 1 October of the current year of assessment. On that date, the market value for a computer was 12,000. Her employer purchased the computer 2 years ago earlier for 15,000. You are required to calculate the cash equivalent of the benefit for the current year of assessment. Okay, the solution is very, very simple. As I have said earlier, take the lesser between the cost price and the market value. The cost price is 15,000. The computer was purchased 2 years ago for 15,000. The market value is 12,000. Okay, currently the cost lesser between the cost price and the market value, the lesser between the two, between 15,000 and 12,000 is 12,000 times 15% times the months over 12. So the employee has used the particular asset for only 5 months in a year of assessment. That gives us 750. Less a consideration. Unfortunately, there is no money that is paid by an employee for the use of this particular asset. So the cash equivalent of the benefit is 750. Thank you very much. I hope you enjoyed the lesson.